Actually, this is a market review. I want to go over what we're seeing currently in used car market trends. Again, we track information from multiple resources. One of them is going to be Black Book. We look at wholesale, what percentage of wholesale units are being sold. Okay, I think that's a big indicator of dealers acquiring cars because their sales are happening. We're going to also look at used car shopper index based off of Google and see if the Google shopper index is up or down. Typically, obviously, going into these holiday season tends to be the lowest time of the year for shopper index for people looking for used cars. We're also going to be looking at all of our current lot pop dealers and what their current 2-week sold percentage is. Again, basically what that percentage is if you times that by 2, you'll get a full month of sale rate. And right now, again, it seems to be a little bit slow. As of today, our dealers are sitting at a 40% 2-week sale rate. So that's an 80% of their inventory in a month. Now, that might sound good to a lot of dealerships, but our goal is typically to sell 100% of that inventory right now. Again, as things slow down, the market's slowing down. Dealers right now are sitting at 80%. But again, the disciplined dealers are keeping it clean. They're moving it out in that first 30 days. So we'll go over how all this, I think, now, what's the other part that we look at? Retail days to turn. That's going to be a big one because, again, as things slow down, that number is going to be funny. So I'm going to share a screen and go over these stats with you. The average retail days to turn, that's coming from Black Book too. So I want to go over these metrics with you. I'm going to show you a graph. So if you're listening to this on a podcast, you might want to check us out on YouTube, subscribe there, that or my Facebook page. I'll have this going live there, and or LinkedIn. Just look for Jason, J-S-E-N, Rice, and you'll be able to find it there. So that way you can see these graphs. So I'm going to share my screen here in a minute. Let me go ahead and pull it up, and let's go over kind of, again, what we're seeing out there currently in the used car market as of Friday the 13th. Okay, I've gone over these charts multiple times. Matter of fact, I'll go down here. This is a shopper index for just this Tuesday, because I pulled it on Tuesday because Black Book updates every Tuesday. And so shopper index on Google is at a 62 out of 100. Okay. Now, if we go back to last December at this point in time, there's the 19th, 12th, it was at 63. So it's pretty much current as of last year. And you'll see it drops down to 61 around the 19th. So we're at a 62 right now. I'm sure as the next 2 weeks go by, that will continue to drop a little bit, might get in the 50s comparably. Okay, so now with that, you can see the volume. Okay, our dealers were selling 100% of their inventory in July. Okay, and every year that tends to drop down. See, look here, you go back to March, tax season, it dropped down through the spring, and then we had this August uptick in volume, and since September, it drops down all the way through December. Now, this time last year, our dealers were sitting at, let's take a peek, right around here, around a 40% sale rate. Again, that's what we're seeing as of today, being 12/13. It's almost identical. Okay, so you'll start seeing a volume build up going into March. But as of now, again, on Tuesday when I pulled it was 41. Right now it is sitting at 40. So let's take a peek at this. Now, this is the weird part. Okay, so as this volume has dropped for our dealers, as the what you're seeing wholesale sold has been pretty steady since July, 58%. We're sitting at 59%. It dropped off. Okay, so here's why that is not necessarily weird. Cars are selling, but what is really weird is the average retail days to turn. If it's that slow and shopper index is down and volume is down, how is the average age retail sold going from 57 down to 47? Okay, it's dropped 10 days, so that would indicate volumes there. But here's what I think is happening. The shopper count is so low. You got the interest rate. Shopper count's so low. It's one of the lowest that we've seen over the years. So the shopper count being low and dealers volume being low, what that's telling me is a good indicator. And I'm going to probably stop sharing my screen just so I can talk to you. So that to me is a good indicator that whoever is buying, they're looking for good deals. Okay. They're not out there just buying those fresh cars. Because think about it, as we get fresh inventory, we tend to mark those cars up. The photos aren't there yet. Those cars tend to sit. So these older cars that are discounted very low, those are the cars that are selling in the market, bringing down that average age. And or what's happening too, dealers are taking them off the market and trying to wholesale them right now. But I would indicate, I would lean toward the consumers right now. Okay. They are very budget conscious. You're in a slower season of the year as far as sales go, because they're holidays and traveling and things like that. They got other expenses right now. And again, we had an election year. We're running into a new administration. People are just kind of sitting on their hands to kind of see what's going on. So I believe the average age of retail going down and things, that's getting rid of those older cars listed online that were priced really cheap is the indication that I see, because I see a lot of dealership with some aged inventory. Okay, so, and I believe as far as where the market's heading, yes, we're going to have a new administration. I think it's January 20th or 21st, around there when Inauguration Day is. And then from there, I think you're going to need that 90-day window, typical, right? So you're talking March, April is when you're going to be able to see really what this administration and what they've done. If they pulled back regulations, things like that, get the economy moving like there's anticipating. Now, they have no control of the Fed and rates dropping, but I do believe those will continue to go down again over the next year or so. So what we need to really get a good boost in used cars, here's the other in used car operations, is lower rates, which I don't think they're going to be low enough to really spike customers' interest until probably third quarter of next year. But I do think between now and that third quarter and those lower rates to drive enough used car business is new car incentives, new car leasing. It's not just rebates and incentives. It's what you can actually lease a car for that will impact new car business to get that volume up, because there are way more new cars out there and they're sitting there aging. So I think the incentives are just going to get better and better rolling into the end of this year, first quarter of next year, and even second quarter of the following year as they try to start going into the third and fourth quarter. The newer models, right? And so they need to get rid of some new 2024s out there. The 2025s are already hitting. And then by the third quarter next year, 2026s are coming. So you're going to have to think about new car business and the impact on used, because what we're seeing now is 23s and 24s used. Values are dropping considerably. Okay, so you need to stay off of those things as far as you need to get those things moving. Okay, get your purchases moving, because those are the ones, if you're buying a lot of cars at the auction, those are the cars you overpaid for. For those purchases, your purchases should have an average age of sale of like 20 days. Get off them quick, okay? Because again, usually if you're high volume auction buyer, you're buying late model stuff, rental rocket stuff. Okay. And so if new car business builds up, you're going to get a lot of trade-ins, going to drive down used car values. And again, to get a big spike in used car sales, I think we need lower rates still. And that's probably a third quarter, but that's all guesstimate. Really where we're at right now, things are slowing down. Wholesale looks steady. Some people are out there buying for tax season. That's why it looks steady right now, and maybe a little bit up, because dealers are going to start stocking up for February, March tax season right now, thinking they can buy a car a little bit cheaper now than buying it, in 30, 40 days from now. So that's where wholesale staying steady, but the average retail age is going down, making things look like things are moving. But that's really, again, the softer consumers that are really budget conscious are buying these older cars out there, not older by age, but older on dealers' lots. These age cars sitting on dealers' lots where we're blowing them out at 85 to 90% of market. Those are the cars getting grabbed up. That's driving the average age of retail down. There is my market recap for Friday the 13th and December Friday the 13th. Whole things are helpful, are going good. If you need help with some used car operations, get this inventory turning. Again, our dealers, we do weekly calls with them. We got a lot walk tool that combines lead and inventory management. So if you have an inventory tool like let's say a vAuto, but you have Drive Centric, we combine those two worlds. And if we got a truck problem, let's work and call these truck leads and combine and see what half your cars don't have leads. We'll expose those to you. And then half your leads are on 10% of your inventory. That means the activity being done is on very little cars in stock. So we really help combine those two worlds of work customers and cars into one tool. So if you're interested in our help, We want you to sell 100% of your inventory and do 60 to 70% of that in the first 30 days. And we'll do weekly calls and make you accountable and make sure that's happening. Check us out at lotwalk.com and sign up for a demo there. And thank you very much. If I don't see you between now and Christmas, have a happy holidays, but I sure probably do something next week as another update. Thank you.